me do a little bit of self-praise. When I am a fellow in insurance, and I currently work with GDV International Insurance Brokers in Dubai. I handle the reinsurance and insurtech and product development. This is my forte. And I am very happy to be associated with IGIP, and personally very happy to be a brother for Zulfikar and Isham Saab. Just before we start our key panelist address, I just wanted to say how the industry is moving towards digitalization. The whole concept of insurtech should be to reach the masses. This is one very important field which we are talking about. We are talking about deep penetration into remote corners of the world, a sort of a last-minute initiative. This is very important because the city people definitely have easy access to technology and easy access to insurance. What we are talking about is reaching the people who have not experienced insurance till date. We are talking about micro-insurance and to uplift the real needy of insurance, its benefits. Very important. Today, the corporate world is almost insured. Every corporate won't afford to run its business without insurance. But the individuals are still not covered. We are talking about 3 to 4% of the world population having a life insurance cover or having the right type of motor insurance cover and things like that. This initiative, the technology initiative which we are taking over, this will help the last mile guys to reach insurance products. We are also talking about law of large numbers. We are trying to create a new customer base and expand the existing base. Thereby, we bring price advantage to our buyers. We are trying to simplify our products, reduce red tape. The insurance wordings have simplified, in fact, a lot. People understand insurance better. They know how to make a right claim. And we are really seeing the real delivery of benefits now. More insurtech startups means more innovation. When I have a little bit of time in the end of the panelist session, I would present a few case studies there. And one good advice which I would like to say is, profiteering should not be the only factor for insurtechs. We should also aim at doing larger benefit to the larger society. So I start with the first panelist. Let me welcome Ellen George. Ellen George has been associated with IGIP since the beginning, and in fact she has supported us in many seminars before as well. She is supporting a global insurer in US, and she manages the Internet of Things, and she is overseeing all aspects of IoT from sales to billing. She has a credible 15 years of underwriting experience, and she is also a volunteer leader for CPCU Society. Let me again invite and welcome Ellen. Ellen George, please.
Thank you, Chalapathy. Good morning, everyone. Good evening, or good day. Thank you for joining us today. I am going to share my screen now. Can you see it all? Can you see it?
Yeah, we do.
Oh, perfect. All right. Thanks again. I am going to be talking today about IoT, the Internet of Things. The actual title is also something that people are not sure if they want to call it IoT. There are different names for it, but I'm sticking to IoT for today. There are several names floating out on the Internet. What is the Internet of Things? To break it down in very simple terms, think of all the little devices that you have that's connected to the Internet and it's sharing information with your the manufacturers are talking to each other. You might not even know it's doing that, but as long as you have a little device that is connected to the internet, it's considered the Internet of Things. And how is this going to change insurance? If you think about your device, big or small, sharing information back with the manufacturer or sharing information with each other, for example, your washing machine talking to your neighbor's washing machine, and your insurance company can capture all that information. What does that mean? I don't know if we figured it all out, but today I'm going to try to at least attempt to give you just, I'm going to skim the surface of what the Internet of Things means. According to the World Economic Forum, it describes a growing network of Internet-enabled devices. It's going to enable us to have smart cities in the future and driverless cars. Some countries would argue that they already have some smart cities. It's described as the fourth industrial revolution, and the World Economic Forum is estimating that by 2025, that we'll have about 42 billion devices capturing data. I believe the insurance company has always been into big data, always been in technology. It's probably one of the reasons why we sometimes struggle to catch up with the new technology, because you can't just disregard your old one. But this is definitely a game changer. No one has ever seen this much information. They don't know how to capture it. They don't know how to use it. That's all the fun with the fourth revolution. So just a little bit of background on the history of the Internet of Things. It was coined in 1999. And again, as I mentioned earlier, the title might change soon. Who knows? It was invented by a gentleman called Kevin Ashton. And he, in 1999, believe it or not, the Internet was a new thing. And he was doing a presentation at his employer, Procter & Gamble, and he said, oh, well, what am I going to call the presentation? It's about things, and it's about the Internet. So the Internet of Things was born. It accelerated in 2010 because Gartner listed it as an emerging technology. And around 2014, the devices started getting cheaper, mass manufactured, so it became more prevalent and the people can afford it. And since then, it's taken off. The devices are still getting cheaper. One of the earliest examples of the Internet of Things is in the 1980s at Carnegie Mellon. Some professors and students were too lazy to go to the vending machine. So they decided they were going to hook up a computer program to see if there was even Coke there and if it was cold. So that's what they did, but it was bulky and progress was limited. But that was the birth of the Internet of Things, where you're connecting the Internet to a device and trying to get information back from it. There are three domains in the Internet of Things: wearable, enterprise, which would be more of the commercial space, and then the public spaces. So what exactly does this mean for insurance? On the wearable side, you would see more the workers' comp for us. It would mean, would affect more workers' comp. It could affect also GL. Smart factories and precision manufacturing is an example of enterprise IoT, which would be in the commercial space. And then you have public spaces that uses it for waste management, smart electric meters, which has been in the U.S. for some time, and traffic lights. Those are just examples of where it's being used in the public spaces. One of the things when I first joined the IoT division, I kept hearing about the IoT stack. So I thought I would just include a very brief explanation here. The stack has to do with the devices, the software, how the devices talk to each other, the platform where the data is stored, and then the cloud application that actually, and again, that's the software too, that actually sends the information back to the user. So we've got the device, which could be, in my example, I'll just use a water sensor that would detect water. It has software there that's talking to the manufacturer. It has a way it communicates. It can communicate using Wi-Fi, cellular. It has to send information to the manufacturer, talk to another sensor. So that's what you would call the communication. part of the stack, and then you've got a platform. Where are we storing this information? An example would be AWS, IBM Watson, and then how you, the end user, getting this information. Most of the times for us, it's an app. Some recent examples of insurance using IoT is in 2017, the Lloyd's Lab introduced Parcel. They're using IoT devices in their cargo to track the cargo and then take claims as they come up. Then we have Flash Flood, using it for flood insurance based on what I read online. They give you a sensor to put in your home. As soon as it detects there's a flood, depending on the coverage wording of your policy, you get paid. There's also water sensors that are being used in the industry, temperature sensors, vibration. There are numerous examples of sensors, and I think personally that this is just going to continue to grow. As you know, insurance, we look at a peril-based coverage, right? We're looking at, is it fire, is it water, product, GL, property. So there are different reasons why you could be looking at sensors, but it always comes back to a peril. What peril are you either reducing a loss or trying to prevent a loss? So one of the a few challenges is who is going to pay? A lot of times you find that insurance companies want to use these devices, but the buyer, the insurance buying public is saying, wait a minute, who's going to pay for it? You want me to buy a sensor, use it, and then you take the information to reduce your losses. How am I going to benefit, right? So it always comes back down to me, to the money. Who is going to be buying these devices and giving it to the insured? And one of the concerns, too, with these devices is that they can give false alarms, or what we perceive as false alarms. In reading about the VPO spill, there was a sensor on that grid that exploded. It had just been silenced because it had given warnings before. So they silenced it, and the night of the explosion, even though the sensor could have given them warnings it's about to explode, it didn't. So there's always that cry wolf effect of, not paying attention to the alerts you're getting from these sensors. And depending on where you are, you always have to deal with regulation. Here in the U.S., we have issues such as discrimination, rebating to deal with. And what does discrimination mean in the U.S.? It just means that you have to be consistent in how you're offering these devices to your customers. You can't, for example, use premium to say, okay, this person or this company is paying me $1 million, I'm going to give them a IoT device. You don't want to do that. That could be considered discrimination. You want to be consistent about who you're giving these devices to. It has to be fair based on the rules. And each state in the U.S. has different rules. Then there's also this concept of rebating. You can't be giving your customers free things just so that they can buy insurance with you. So that's something also that in the U.S. the NAIC has recently tackled, and it's a changing environment from a regulation standpoint. As the regulations change, I think you're going to see more adaptation of IoT devices. And this one I think everyone knows about, the security and the privacy issues. We've read about a few recent hacks with IoT devices. And of course, we're all worried, or maybe some of us have just given up about the privacy issue. Like, who has all this information on us, and what are they using it for? And then the boring part is the data management and the ownership. You get a lot of data with IoT devices. How do you manage it? How do you analyze it? What format do you get it in? How do you even collect it? Are big challenges being faced by anyone in the IoT device space. And then, of course, there's always who owns the data. If you look at your contract, you might get an idea if you own your data or if the manufacturer owns it, but that's debatable on ownership. And included here just a few examples of lawsuits that I've seen. Amazon Ring faces a $5 million proposed class action lawsuit for their camera being vulnerable to cyber attacks. A good reminder that as we solve one problem, we create another, but that's also an opportunity for the insurance industry. So we could be preventing water losses or slip and fall accidents. We're creating more of an industry for cyber insurance. Ring is facing a potential class action lawsuit for unfair protection fees. One of the things with these devices is you would see they have a monitoring fee associated with it sometimes. And you have to be careful that you could be billed for $1, $2, $3, a monitoring fee for monitoring with these IoT devices. And then I included another example where recently, April 15, 2021, someone was mistaken for being a shoplifter by facial recognition technology. And he's suing the police. That's a very serious matter. Imagine you're just in a store, and maybe you were not even there, and you were being accused of a crime. I like to think with IoT, anything is possible. I've included here just a few examples of IoT around the world. This group, or the majority of people on this call, probably know this more than I do. But I read in the New York Times that Saudi Arabia is building out a city with flying cars, robot dinosaurs, and even artificial moon. So, using IoT devices, China's also started in 2017, and this is just based on what I read online. This is all actually in operation right now. You can take a driverless bus to an on-demand supermarket to enter it using facial recognition, and you pay without having to use cash. I don't know where the people are there where we're going to get money to do all this, but that's to be decided. And that's coming as Amazon has piloted a similar store in Seattle, so it's not just limited to China, it's around the world. India's also enabled 100 smart cities. They started in 2018. So I like to keep a global outlook on the world, so I would be interested to hear from anyone on this webinar what they are seeing in the world for IoT. If you have questions that I can't answer here, feel free to contact me at elainethespeaker@gmail.com. Thank you very much for listening.